Hello traders, in this video we will delve into the strategy that I have been very successful in making quality trades, which is the breakout trading strategy. The breakout trading strategy is applied by many professional traders around the world in different ways. Now I want to make this video to consolidate and delve into every aspect that the breakout trading strategy brings to successful traders. First of all, what is a breakout? The main characteristics of a breakout: first, support and resistance levels. Resistance, a price level at which there are many sellers, causing the price to not break through. Support, a price level at which there are many buyers, preventing the price from falling lower. Second, confirmation, a breakout is considered confirmed when the price closes above or below resistance, with a large increase in trading volume. Third, market momentum. Breakouts often create strong momentum in the market. After a breakout occurs, the price may continue moving in the new direction. Fourth, trading strategy. Many traders will enter a buy order when the price breaks above resistance, or enter a sell order when the price breaks below support, hoping that the new trend will continue. Why are breakouts important? Buy-sell signals. Breakouts can provide traders with strong signals about a new trend. Probability of success. Breakouts are often accompanied by increased trading volume, indicating market consensus on the price movement. So in summary, in my opinion, the breakout has two main keys that we need to understand. First, the breaking of the top and bottom of an existing trend occurs. The second is the breakdown of support and resistance levels. Now let's go deeper into analyzing the above two key points about the breaking of the high and low of a current trend occurring. Please see the following chart to see clearly. The bottom price fluctuates like a miniature version of support and resistance levels that you can easily see. When trading breakouts, you can trade breakouts of swing highs and swing lows, or you can trade support and resistance breakouts. Second is the breakout according to support and resistance levels. You see on the chart, on the current chart, you see the price creating an important resistance zone. The price has tested twice at a certain price zone. Then the price broke up and closed above the resistance price. And especially, this is an important price level that strengthens the resistance for a more certain breakout than the swing top breakout. And this is considered the main support and resistance level. So we have two trading methods: breaking the swing top, swing bottom, or breaking the support and resistance level. And the following three things: we should not trade breakouts. Firstly, you should not trade counter-trend breakouts. Second, you should not trade breakouts when there is no trend. Third, you should not trade breakouts when the market is still far from the price structure. You see, when participating in the forex market in particular, and the financial market in general, you have heard the saying, let's see the trend as a friend, and until it changes, why do I say we should not trade breakouts against the trend, but trade with the trend? You look at the chart to see that every trading position following the trend will have many more trading advantages than trading against the trend. You will see the downtrend here, and in this downtrend, the small peaks are gradually lower in the direction that I marked. So when you trade with the trend, this means you are looking for short trades. You see the short trade move in the trend is much more sustainable. The big and solid downtrend moves give us a lot of favorable trades in all aspects. And we will compare if we go against the trend. That means we will buy and go against the trend with the market's uptrend. You see the upward price movements come from the opposite trend. These are limited increases. You see there is a clear difference between the buying side and the selling side. The selling side is much more dominant than the buying side. If you keep trading in the opposite direction of the trend, it will be difficult to have profitable trades, and the RR ratio of that trade will be very low. So I strongly advise you not to trade against the trend. To see clearly, I will consider a few more points on the chart for you to see. When you trade against the trend, false breakouts will appear and your trading orders will be at risk of rapid loss. So be careful when trading counter trends, whether you trade breakouts, retracements, or whatever technical method you trade. Next is the second thing: we should not trade breakouts. That is, we should not trade breakouts when there is no trend. And the first thing, we should not trade against the trend. Then number two is also difficult to trade when the trend is not there. See the following example. You see that is the characteristic of a non-trending market or a sideways market. A narrow range of price fluctuations within a specified price range. with clear support and resistance levels. Lack of momentum. There is no clear trend. The market can accumulate or distribute goods. Take a look at the sideways market pattern. Regarding the risks in trading breakouts in sideways markets, you will often encounter possibility of fake breakouts. In a market without a sideways market trend, breakouts can easily be broken quickly and re-entered the range. This can lead to losses if you enter an order right when the price breaks through the support or resistance level. Low trading volume. Breakouts that occur on low volume may not be reliable due to lack of market consensus. To trade in this sideways market, the most popular strategy is to trade within the price range, meaning we will wait to buy near the support level and sell near the resistance level. As for breakout trades, then we have to wait for confirmation of a good closing candle clearly above or below the resistance support level with increased trading volume to confirm the new trend. But here, I have gone through many experiences I see with the quality of placing orders in this sideways market is very low, should not trade the value spent for the sideways trend. The third thing we need to avoid is breakout trading when the market is far from the price structure. You look at the GBP JPY chart in the 4H frame you will see. In terms of time frames for trading, the basic principles are the same. Whether it is a 4H contract, a one-day contract, a one-week contract, or a one-month contract. So just pay attention to the principles and apply them to trading no matter which time frame it is. Currently, the market is in a clear uptrend. You see a very good uptrend. Looking at the market, we see a good uptrend, and the price is at a very high level. Usually, traders will want to enter a trading position at these prices and expect the price to continue to increase in the future. I tell traders that if you enter a buy position at this point, do you think about where to place the stop loss effectively and where is the reasonable position for you to close the loss safely? I asked many traders and they had the same answer, which is that they will place the stop loss order below the nearest support level. But you see, to place it below the nearest support level, the distance between the entry point and the stop loss is very far. So the loss is very large. Not to mention that your profit taking will be greatly limited if the market goes up a short distance from the entry point and then reverses. At this time, your order will be difficult to control and easily go into a loss. I really don't want to solve the problem of guarantee because there are certain times in the market that traders can be successful when applying this trading method. But I really advise you not to trade breakouts when the price is far from the structure because firstly, the stop loss for that trade is very large. Secondly, the profit result gives you a very low risk-reward ratio. So now we will go into the key point of how to trade breakouts most effectively, like a pro. Here are the things to remember. One is trend is you. You must want to trade with the trend. Two is near the price structure. You must want to trade near the structure most effectively. Three is accumulation. You must want to trade breakout with clear accumulation. I will go into the three things above for you to understand clearly the market trend is your friend. Remember this when participating in trading, regardless of the market, trading with the trend is very reasonable. You see that on the chart. Following the trend will help us see many factors clearly from determining the allowable loss range and setting the expected profit level will be much easier. You can see that the price has been consolidated and increased higher. And based on the flag patterns, we can enter trading positions when the price breaks out. You will increase the success rate for each transaction. Trading near the price structure, look at the following chart. I have mentioned the bad factors above about trading far from the price structure leading to ineffective trading. We will go into the evaluation and analysis of trading near structure. Look at the chart you see. Now, you want to trade here. Then placing a stop loss below the resistance level will be very effective, right? You will place a stop loss somewhere here that feels safest. With a tight stop loss level, you will have a much more effective risk-reward ratio because the price doesn't need to change much in your favor before your R multiple starts to turn profitable. When the price moves in your favor, you will receive a risk-reward ratio close to 1 or even higher. It gives you a much more favorable risk-reward ratio because your stop loss is much tighter. And why is your stop loss much tighter? Because your trading is closer to the structure of the market. You can rely on this structure to set a reasonable stop loss level. Compared to the previous example where the market structure is far away, Placing a stop-loss order will be much more difficult. The last thing I want to remind you is that breakout trading in the accumulation phase. First of all, we need to understand clearly about the accumulation phase of the market, when and where it occurs. The accumulation phase is the time when the price moves in a narrow range, often showing the hesitation of the market. During this phase, the buying and selling forces are relatively balanced and can last for a while, showing the consolidation of the price causes of the accumulation phase. Investor hesitation. After a downtrend, investors may wait for clearer signals before deciding to buy. News or events. Economic and political information can cause uncertainty, leading to the accumulation phase. In this example, you can see that we tend to have a trend in our favor, an uptrend and a resistance zone. Then we have accumulation and consolidation here. Usually, many traders, after seeing the resistance zone, immediately think, is this a resistance consolidation zone? Or should I sell at this price to make a profit? Then they short sell in the middle of the resistance range and place a stop-loss order above the high. That is what many investors will do, because when the price hits the resistance, then it makes sense to short sell. But I want to give you a little deeper insight. Let's think about this more deeply. When the price hits resistance and consolidates at the resistance zone, where are the short sellers? Why didn't the price push lower but tried to go up? Why is the market like that? You have to think like this. Why the price didn't go down but consolidated up? Why didn't the sellers push the price down? That is, first, the sellers are no longer participating in the market at that time. Second, because strong buyers consolidate the current price zone, no matter what the reason is, one or two, it is not beneficial for us to enter the market with a short order at this time. And when you see the consolidation of resistance, it is basically an accumulation right before the resistance zone. It shows strength, a breakout strength. In this trend situation, find a way to buy when the price is at a high and place a stop loss at the most reasonable level below the resistance. This is what we need to pay attention to. Look over your chart, see how price is approaching support and resistance zones. Ask yourself what would happen if there was consolidation at the support and resistance zones. Would it improve the chances of a successful breakout? Do your own research, and you will be surprised at what you find. So this is something to look at. Trade breakouts with consolidation, and this will really improve the quality of the breakout setups you are taking. Hope you find and learn a lot from this video. Thanks again for watching and subscribing to my channel. See you in the next videos.